Would you like to learn from some of the best property people, they call them real estate here in America, people in America? Would you like to understand how to protect your wealth? Would you like to understand the future of oil and why it represents a significant opportunity at the moment if you have the right partners and know how to get access? And would you like to understand the playbook of commercial real estate and where it's going? And the fact that there's actually a lot of headwinds and a lot of pain coming down the pipe, and what do you do about it in terms of that process? Well, stick with me, and this is the full update from day 6. So we started with Jason Haartman, and he's an empowered investor. He started a podcast in 2004. And some of the things that he spoke about here were, we got multi-decade high interest rates. They rose over the last 18 months to 2 years, the fastest in history. Now, he also said that all real estate is local, and that, as an example, the Austin property market has come down by 12 to 14%, but the average across America is 3% up over the last 12 months. A great saying he said, which I enjoyed, was you can't hear the dogs if they don't bark. And he said, you've got to actually look, when people give you stats, what are you actually looking at? And he said, there's the lock-in effect, which, by the way, I spoke to Ken McElroy about this yesterday when we had the pool party just down here. And 65% of Americans have locked in their interest rates for, nearly 30 years, 28 years normally or something, or 30-year mortgages. And that's at below 4%. So they're not impacted by this rising interest rates at all. And 40% of Americans have no mortgage at all in terms of the process. There's 140 million homes or apartments in America and 800,000 on the market, which is quite high at the moment. And the market activity is low because the new buyers are not being able to come into the market because of affordability. He spoke about 3 types of markets. You've got the linear market, which is about being steady and profitable, and he gave examples of Memphis and Indianapolis, etc. Then you've got cyclical markets, the roller coaster like LA that just goes up and down, up and down. And you can make money there if you time the market and get lucky, but the linear markets are far more predictable in the long term. And then you've got a hybrid where they're kind of between the two, and somewhere like Austin kind of fits in with that hybrid model in terms of the process. One of the things I really enjoyed was he called it the Haartman Comparison Index. And this is where you compare the average house price in US dollars to what it would cost in gold, or what it would cost in oil, or what it would cost in rice or eggs, or even the S&P 500 index. And if you took gold, it's actually quite cheap at the moment, the average housing price in America. And if you took it in terms of the S&P 500, it's the cheapest it's ever been. And it's a really interesting comparison. It makes me think of, in my book, Property Going Global, I talk about the Global Wealth Index, which is the same thing. It's the buying power, and it's really interesting to think about it. Like, not what's the price in US dollars, but what's the price in gold, or what's the price in eggs, or in rice, and there's 42 of them that he took us through. Something I found really interesting is he spoke about the boxing match, and the fact that on the one side you've got government, and you've got bad fiscal and monetary policy and basically rising inflationary pressure. And on the other side, you've got tech. And what's happening with tech is that, it's causing inflation to come down because there's far more efficiency within the economy and everything in between. He then went into the 6 ways that America will get out of their government debt. And, I'm not going to go through all of them. There's things like default, et cetera, which, by the way, they did with Nixon in the 70s. But he said the single biggest way that they do it all around the world is through inflation. And then if that's the case, you need to know how to use inflation. And that's where he spoke about, and he took us through all the models. Now, for the Wealth Hackers, the Mastermind members, I'm going to take you through the calculations again. I've got all the notes, all the pictures and everything else. And I will show you how you can use inflation to literally pay down your debt as quickly as possible and significantly increase your wealth in terms of the process when it comes to real estate. Then we moved on to Elizabeth Tresp, and she spoke about wealth protection. She's a lawyer, and obviously this is more related to Americans, but equally if you're investing in America, you need to know this stuff. She took us through the process of a court case and what happens when Americans get sued, and what you should be setting it up with an irrevocable living trust and LLCs, etc. Again, for the Wealth Hackers, you can click on the link below, or the Mastermind member, click on the link below, and you'll get access to all the pictures, the diagrams, the graphs, and everything else. But the thing I did enjoy is what she said with Rockefeller, who said you must own nothing but control everything, which is the principle of wealth protection. We then moved on to Jay Burr, who's done his 3 generations of oil, which I found really interesting. And he said there were more millionaires made in the 1900s through oil. Think of the Rockefellers, etc. And he speaks about American oil and the fact that there's 9,000 companies with less than 12 people, and they produce 83% of the oil in America. And he spoke about how they were decimated. The oil price dropped dramatically in 2019. They were just trying to recover, and then COVID hit and they literally fell over. And so there was a huge opportunity to go out and buy reserves of oil, and it's made him, he's doubled and tripled the opportunity. And now what's happened with Trump coming back into power, Trump wants to jumpstart the American economy, and so he's dropped the oil price from $80 a barrel to $60. So it's the exact same pattern as to what happened in 2020, and he thinks that he can do double, if not triple, the returns in oil now and be able to buy up the reserves, etc., etc. The returns that you're looking at are 15 to 1 returns. That means if you put in $1, you make $15. They found a way to protect your money and to provide cash flow quicker in terms of the entire solution. And he's someone that I'll definitely be getting to come and speak on my mastermind to our mastermind members, because I think it'd be really interesting to understand oil and to have a partner on the ground that we could trust and be able to get access to it. And then finally, he said 80% of the world is only starting to use oil now. So he said oil is in everything, every single thing that you pretty much use in the morning, in your life, actually. Sorry, he's got a movie called, what is in oil when you wake up at breakfast. He takes, through everything. And he said, but there's only 145 years worth of reserves on this planet, and there's nothing to replace it, and it represents a significant opportunity. Then we moved on to Hammond. And interesting enough, she started investing in real estate at the age of 18. She's only, she became a multi-millionaire at the age of 25. And she spoke about, she's got her own company with 25 employees in the commercial real estate financing space. She took us through all of that and said that we're in a CRE storm at the moment, so commercial real estate storm. And that's basically what's happening now is that there's a whole bunch of things that one needs to do, and one of them is that we need to re-underwrite deals. If we've done a deal due diligence, we need to go back and look based on today's metrics and make sure it works. We need to focus on properties that are in high demand, that are very resilient properties, and I'll talk more about it just now with commercial, but commercial being one of those. Relationships matter more than ever now in commercial real estate. You need to optimize the capital stack, and you need flexibility in your financing structure. Some of the headwinds that the commercial real estate is facing is that the Fed is emphasizing that there's a concentration of risk in these commercial loans, and I'll talk more about that just now. Many of the banks and lenders are extending and pretending where they're passing on the debt down the road. The banks are getting tighter and tighter with regards to loan to values. You need more and more money, plus in terms of the ratios of the rent income to ratio models, and so there's less and less affordability on these properties. And then final Basel III is coming in, which is also getting the big commercial banks where they have to hold more deposits, which will also have impacts on loan to values. When you look at volumes, in 2024, it was the lowest volumes of traded commercial real estate in 11 years, and the total CRE expectations for 2025 are 665 billion. And so it is up in terms of that process. Now, I wanted to look at some of the notes here that I made, because I made some extensive notes. And again, for the Wealth Hackers and Mastermind members, I'm going to take you through all of the graphs and slides. But we went through all the sectors. So if we look at multifamily, the government still likes it. The delinquencies or the vacancies are actually up, but the cap rates are stabilizing, and that's reinforcing the tailwinds in terms of financing. In terms of office, this is the least, or the one that's been affected the most. Delinquencies are over 10.3%. It's the most challenged. The banks only really want to finance prime class A. They're giving lower loan to values, so the rates are up, and there's a lot of distressed assets out there, particularly in San Francisco, New York, Chicago. Industrial, that has the lowest delinquencies, and there are strong fundamentals. It's a strong asset class, and you need to look for stuff that is close to infrastructure and services. And she spoke about, there's $8 trillion that is coming in because of Trump's whole move to bring industrialization home to America, and how industrial is going to benefit from that. Retail vacancies are at record lows. They look for places that are grocery anchored and experience based on, so it's all about experiential retail, and mixed use is what's working. Hospitality's had a rebound since COVID, but the banks don't really like it yet unless it's with well-branded hotels. She took us through the current terms, and I've got graphs on all the different capital sources, the debts, and how you can use debt funding. I know we've got debt funding on our platform. We've just done that Manhattan deal with it, where private capital makes sense. And then she also spoke about the regional and where they're looking for. They like the southeast of America, places like Florida and Atlanta, etc. They like Texas, they like Florida, they like Arizona. They don't like New York City, San Francisco, and Chicago. If you take a developer focus like in Phoenix, you've got to be careful. I spoke yesterday about downtown Phoenix. where there's a massive oversupply. And that's why you've got to know the markets, you've got to know the hyper-local focus, and I always say, you've got to have the right information and the right partners. Then we spoke about this impending crash, these loan maturities, and there's $1 trillion that is maturing in 2025. And that's really interesting, and 25% of them are expected to be delinquent. Now remember when we had this in the residential space with the global financial crisis in 2008? By the way, we watched The Big Short last night, which was absolutely fascinating. Well, it's happening in the commercial space, and that's why the banks are setting and forgetting and that sort of thing. And there's a slow bleed in the market because they don't want to bring too much, they don't want to foreclose on too much stuff all at the same time. The defaults in office are expected to go over 20%, and multifamily delinquencies are supposed to go up, and hotels. They're expecting rate forecasts to come down. And then she spoke a lot about AI and how you can use AI in terms of doing all your valuations, and said you should use AI to act as a top underwriter for this deal and what risks should I take into account. Really great idea. And she spoke about how they've got access to 7,500 lenders in America and how they use AI to look at the offer, to find the best banks, and then to match the offers together. Really, really amazing process of how she's taking everyone through in terms of the process. Finally, in terms of her strategic playbook, you need to explore all the lender types. So you need to go out and it's all about the key relationships. You need to lock in the rates and try not to go with variable. You need to use mezz and preference to bridge the leverage gaps, and you need to structure win-win deals in terms of the process. And she went on and on about relationships with the real edge. It's all about your relationships. Why do I say? You've got to have the right information and the right partners. So to summarize, 2025 is all about learning how to sail in rough seas. So, we're here on a boat, and the whole thing has been how do you deal with challenging tides and challenging seas. And then ask yourself the question, what am I building and who am I becoming? Which was just absolutely amazing. So if you enjoyed that, that's the summary from day 6. You can see here that I'm by the pool. That there's the entertainment up at the back there. You've got this is a floating carpet that goes up and down here. I always do the videos at the back, but today is the most magnificent day. I should be able to just do a bit of a around here so you can take a look in terms of the boat, get a view of the boat all the way around. Anyway, let me bring you back here. So anyway, I hope you just enjoyed that. If this is something you enjoy, subscribe to the channel. You can click on the links as well at the end to get the shorter version. I do them every single day. And what's important is that you can also go down and join the conversation. You've seen me with all my notes here. The people that are in the community are going to get access to all of my notes. And you can literally go and get a report. So the report today will be on the commercial real estate. I think it's brilliant. She was amazing. And I'm going to do a report. So what you just type in, you click on the link below, you go in and be part of the conversation, and you're going to type in the word commercial, and then commercial will be how you'll get the commercial real estate report, which will be amazing. If you want to join the Wealth Hackers or the Mastermind, again, you can click on the link and you'll get access to all of my notes. So you'll get access to my audio notes, you'll get access to my written notes, you'll get access to all my pictures of the slides. And in some cases, you might even get access to me interviewing them in terms of that process. So I hope you enjoyed day 6. Tomorrow is my final day. And by the way, today we did a cowboy auction and I won it. In terms of, so South Africa is clearly a place on the planet that people want to come to, because I traded a trip to Knysna, South Africa, and I got offered 2 ounces of gold and 10 ounces of silver, which is a lot of money actually. So yeah, pretty awesome. Anyway, hope you enjoyed it. We'll see you tomorrow. Cheers. And don't forget to subscribe to the channel.